Hello everyone and welcome to Actions to Wealth UK. I'm Ash Ball, taking you through this week's analysis. This is March the 20th. So this week the dollar will be back in focus one way or the other. We'll get some news and data just to start things off. Just to begin with a little bit, we'll talk about last week, anticipating that the dollar would weaken at the start of the week and strengthen towards the end of the week. That didn't happen. The dollar continued to continues to weaken against the other currencies. Specifically, the Aussie did very well against the dollar last week, but most of them did pretty well against the dollar. The euro did very well, the pound did very well, the yen did very well, and that was off the back of the fact that the interest rate hike wasn't anticipated to be 4 times this year, but they just reiterated that it would be the 3 times. So with the dollar being so bought up previous to that announcement, the market didn't seem to like that press release of just 3 rate hikes this year, and the dollar started to sell off. Things haven't really changed with the dollar in as much with the value, so we need to be a little bit careful. But I just want to start with this dollar CAD. In fact, as I said before, let's start with the news and data, because this is quite key as always. So we'll start with Monday, and we see nothing major coming out of the dollar except for this one here. Now they've given it a orange folder, which is why I still like to put the orange folders on my filter, because sometimes some get through the net, and this is always going to be quite important. President Trump speaking at any point is going to be important. What can he say this time? Is he going to be presidential and not really say a whole bunch, or is he going to come out and say something wild? FOMC member Evans speaking as well. That's going to be key to the dollar, very likely depending on what he intimates. Then we really get down to some real business on Tuesday. Monetary policy meeting minutes out of Australia. CPI year on year out of the UK, which is again very, very important measure. CPI is the Consumer Price Index, and that is the measure of inflation. So inflation getting too far beyond this 2.1%, previous month was 1.8%, is going to put Mark Carney somewhat on the back foot. I think they'll probably be able to handle around about 2.5%, but if it starts going too much higher than that too quickly, then interest rates will have to start moving. FOMC member Dudley speaking on Tuesday also. That's 10 a.m. UK time. You can see here that it's the 8:28, and that's 8:36. I'm not sure why that's quite off, but that's going to be 10 a.m. UK time. Core retail sales from Canada. This is going to be key for me as I look at the dollar CAD. GDT price index from NZ from Kiwi. That is going to be fairly important, but the real big one for the Kiwi and New Zealand is this official bank rate. So we see how the official bank rate affected things last week with the dollar and with the pound and with the yen. This week, this is going to be in focus. And then we get the statement. So we'll see what might happen with the Kiwi this week off the back of that. Retail sales from the UK Thursday, unemployment claims, Fed Chair Yellen speaking, again, may or may not be important depending on what she intimates. And then some various other bits and pieces out on Thursday that may not have as much bearing. CPI, month over month. Again, Canada, Consumer Price Index, going to be important to a degree. They're not near the 2% target is what most central banks are aiming for. Anything under that doesn't really put them in too much of a concern to try and raise interest rates to control that. Core durable goods orders from the dollar later on in the week. So we'll see how that's going to affect things. Now we know the Kiwi, the CAD I'm interested in, and the dollar again will always be in focus. If we're looking early in the week, this dollar CAD may be of some interest. A little bit tricky to read, but if you look at the overall picture here, this is the monthly chart. So the primary chart here is looking for this. This has been pushing to the upside. Still kind of questionable where this trend is. Can't really call this a head and shoulders, even though it does look like some sort of distribution pattern. We do see this high up here, low. Looks like we might be forming a lower high here, and this bar isn't complete yet, so that might give us more of a picture as the month goes on. But currently, just the push up into the February pushed up into the January sell-off, and this is what we got going on in March right now. week over week, what this is suggesting at this moment in time is that we still continue to push to the downside. The fact that we are broken through this particular area is really the thing that's alerting me to that. We got a few touches down here, so that line isn't all that clean, but it seems and certainly appears that we're going to get moves to the downside off the back of that. The thing we need to be very careful of is the fact that this really is still in an uptrend. When we're looking at the intermediate chart, the primary chart is questionable, but this intermediate chart appears that we've broken through a specific level of resistance here, which actually could put a buy area back in at this particular point. And as I say, things haven't really changed with the dollar. The intimation that we weren't going to get the 4 interest rate hikes isn't that much of a big deal. There was a little bit of disappointment, possibly. Maybe that's forced some of the people to come and take a bit of profit, take a bit of the dollar off the table. But it might actually start the buying here. So we need to be careful just to see what's going to happen with the direction that's going to be chosen. Daily chart gives a slightly different picture again, where this was the area that we marked off on the weekly, just at this point here, which we're not yet through. So possibly waiting for that area to be breached might be the safest area to try and get into some downside. But couple that with this specific area here. So that particular area has already been tested once. It got refused, so that shows us that area certainly is being watched. Now, if we want to bring up a fib, I like the 38.2% retracement when I'm looking for trends, and you can see that particular area is right on the money. 38.2% retracement back to the upside, got refused. So the area that I'll be watching out for is this one spot 33.74 level. If the market pushes into that area and it looks like it's going to hold, then I'll be looking to see if I can sell into this area and see if we can get through this line and maybe we get a decent move to the downside. If, however, that gets through that level, I think upside would be where the smart money is going to go with the dollar CAD. Bringing the Kiwi into play now. The Kiwi also appeared to start to break through a level. Very strong move to the upside. A push to the downside that appeared to hold. Let's check the Fibonacci on that as well. 38.2% retracement is the close price, which is much more key really than these spikes. The spikes got down to around about 50%. 38.2% retracement was the whole price. That suggests that the trend is still in mode to keep going higher here. And I probably want to aim for something along that particular line there, which gives us plenty of room. If we were coming down to a 4-hour chart, you can see that line's a fair way off. Trying to get some sort of entry with these bars isn't going to be simple. That's going to be quite a tricky trade, but certainly want to look out for the Kiwi and see what happens. One of the reasons I do like the Kiwi is that it appears that we do actually have slightly more significant support when we look at this monthly chart here. We're not through this line. Even coming through this line on the month isn't such a big deal unless we close beneath it. But right now, this particular level looks like it's holding. So if we can get another push to the upside, see what kind of bar we're going to end up with here. That might even indicate that this was somewhat of a hanging man, or more like an umbrella, but that's potentially going to show us that there is some more room to the upside from here. So again, need to be watching, let the market tell us what's going to be going on here. Looks like a half decent area for a hold, as you can see, and if it continues higher, then I'm going to be looking for a buy in the Kiwi. Considering how sold off that's been, that will not be a simple trade, but if we start to look at something of a pattern here, looks like an accumulation pattern just starting to form. So if we can get somewhere near these lows along that line, that looks like a pretty decent line, somewhere near these lows, and if we can get something that looks like a hold on the shorter term time frames, specifically the 4-hour and the hourly, then I'll be looking to buys and see what we can get, see how much we can get out of the trade and the trend. So that's going to be about it for this week, looking specifically at the Kiwi, the dollar, and the CAD. As the week goes on, that picture may well change, so tune into Actions to Wealth UK, and we'll see what's occurring. Obviously, the whole team will be helping you through your trading week, so continue to follow what's going on. Any ideas that you wish to exchange, then please feel free to send us a message of some sort, and we'll get to that when we get into the show. Good luck and be vigilant.